Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. After a tumultuous week in many markets, it was on the one hand surprising and at the same time not surprising to see the most reactive of the base metals has been copper. Suffice it to say that last week was a weekly key reversal down here, and during the week, the Wednesday, Thursday and Friday also created a 3-day bearish stick sandwich pattern. In a slightly bigger picture, the October to date action had created a small bearish descending scallop pattern. This gave a primary target down in the 92.02 zone, which has been achieved today, and a secondary harder to reach target X down in the 87.50 zone. Around the lows of August. Now, I've also been stating here for many months now that there are, if you like, 3 important congestion zones, which in turn have become either important support zones or more recently resistance areas. Above the current market is the highest and possibly the toughest of these congestion zones, between 97.50 to 99.95 area. The next one, the middle one, is in the 93.95 to 96.06 area, which at the moment contains the slowly rising gold long moving average, currently 94.04, and which the market took a sabbatical in during most of October. Finally, there was a smaller one between 91.83 to 92.56, which capped prices for a while in August, and which today we have seen prices slice through them completely, though as yet we have not decided where the close will be. The key recent supportive feature had been the medium moving average, currently at 94.36, which, as I said last week, and I quote, "If it wasn't for this moving average, then prices may have been a lot lower," end of quote. Well, last week we dipped and closed below this medium moving average, but reverted back up swiftly. Not so this week. With yesterday's close back down below it, the lowest close since mid-September, today's moves look like they're exploiting that move lower. Below, we now have the 50% Fibonacci line of the July 22 to May 23 move at 2029, but I have my doubts about that support. Instead, I'd rather start concentrating on the dark blue extension to the upper trend line, currently at 87.89, of the June to August 2023 ascending triangle, as the gateway to not only target X but also the August lows just above 8700 that had been prompted by the combination of the 50% Fibonacci line of the October 2020 to May 23 move at 86.86 and the April 2012 high at 86.65. LME 3-month aluminium. After a tumultuous market in a tumultuous week in many markets, it was surprising to see that aluminium, unlike copper, did not make a weekly key reversal last week, but instead chose to make a lesser outside week pattern, though it was awfully close to a weekly key reversal down. This week has seen a sort of follow-on lower to the outside week, with prices moving down through some significant levels. And this metal may still surprise us as we are not too far away from setting up the conditions for a monthly key reversal, and this with just over a week of November gone. If prices manage to drop down below 25.05, so it's 25.05, then we'd be on, and we'd have to wait until the close on Friday the 29th to see if it would be a monthly key reversal down or up. But all that is still hypothetical, as prices still need to edge this month below 25.05, so that level is worth watching. Overall, prices are still held within a number of patterns, mainly bullish. In the big picture, we have the purple tines of the mid-December 2023 to late July this year bullish Andrews pitchfork. We are currently in between the middle tine above, currently at 27.84, and the lower tine below, currently at 24.26. We also have, for the same time period, a bright red shallowy bullish shift pitchfork. The market today has just pierced the rising middle tine, currently at 25.68. Additionally, we have closer to home a dark blue late July to early September bullish shift pitchfork. Last week prices pierced the rising middle tine, currently at 26.47, and it appears to be well on the way to targeting the dark blue lower tine below and the long moving average, currently at the lower tine below at 25.15. Now below the lower tine we have the medium moving average, currently at 24.86, and the long moving average, currently at 24.61. These would be the immediate subject of scrutiny should prices break through the dark blue lower tine, and especially if we do set up the conditions for a monthly key reversal. Finally, there is one other pattern I'd like to quickly discuss, and that is the bright green highlighted October to early November bull channel. Prices pierced this last week and late the week before on the downside, but it was only this week that we really saw a break lower. The primary target for the move lower at 25.63 has been reached today, but we have a harder to reach target X still alive, down at 24.98. This is below the low of the origin of the bull channel at 25.05, but it is between that low and the medium moving average right now, so it's worth considering as well as a pattern target for now. LME 3-month lead. Last week I detailed a number of supports below the market at the time, as well as a resultant move that is very, very significant now, and I quote, "Some of the supports below, some of them well below, Fibonacci-based congestion otherwise, between 1994 to 2002, followed by the June 2023 low at 1976, which looked, how shall I put it, less interesting. Then the 2024 low in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. There is also a neckline extension, currently at 1937, of the July 23 to February 24 head and shoulders continuation pattern. The reason I mention these supports below is that they contributed in eroding the decline we saw in early to mid-September, enough that it was stopped and turned back upwards and brought about eventually a new pattern, a bright red early August to early September bullish shift pitchfork." End of quote. Okay, so over the middle of October, prices had been tramping around the middle tine, currently at 20.96. But late 3 weeks ago, prices broke down, specifically down through the green highlighted flatlining short medium moving average, currently at 20.56, and the congestion at 20.58. Indeed, the action over most of October could now be seen as hesitation. And I added this comment 2 weeks ago when I said, and I quote, "Question now is whether this hesitation is part of the bear flag type action or a new base for a possible attempt higher. It just seems that both topside and below we have some considerable resistances and supports, which I detailed earlier. I suppose that is why the market is seemingly marking time right now." End of quote. Well, 2 weeks ago it seemed the hesitation had become a bearish halfway hesitation with potential move down to target X down in the 1980 zone. I said about this also 2 weeks ago that it was, and I quote, "This would be a direct test of the integrity of the bright red bullish shift pitchfork, as the lower tine is right in the way below, and that's currently at 20.01. But that is not all, as if we do get down there and continue, then please be on the watch out for 2 bearish and 1 bullish possibilities. The action from August 8 could then be seen as a possible large bearish cat's ears pattern, or an even larger early July to date bearish halfway hesitation. Alternatively, it could then be an opportunity for a mid-July to date triple bottom." This is all getting very interesting now, and that's the end of the quote. In all this, I truthfully did not think the bright red lower tine would be that much of an obstacle on the downside, but you can clearly see that it was and still is, as prices 2 weeks ago staged a combined immediate countering key reversal up and bullish engulfing pattern, plus a bullish closing white Mariposa based on the bright red lower tine, Then last week we had a combined key reversal up and bullish engulfing pattern. And then this week the market is gingerly trying down there again. Why? Well, because the subsequent rallies were capped by the green short-medium moving average. Thus, whilst this move up was a welcome indictment of the bright red lower time, I am concerned that with a potential third week of testing lower, the bright red lower time may end up being a temporary support. All this unless the topside moving averages, and I also include the declining medium moving average, currently at 27.8, unless these are taken out, and soon. Continue to watch this space.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.